Yo, good afternoon. This is Noble. Welcome to Insider Trading. Music was like 1 second off. I always mess up the intro. I'm gonna do that again. Good afternoon. This is Noble. Welcome to Insider Trading. That's better. Gotta start it off right. Some things you just have to start the right way. Welcome. What we're gonna do today is I want to give you guys some really sound principles, and I want to show you what happened during the last recession. I want to show you where we are in this one. We're going to compare the two. Sometimes things as simple as that. Looking back at the past, not as an indicator perfectly of what will happen, but using several of these recession-like drops, downtrends on a month chart for my folks who are a little bit more technical, and simply saying, based on the last 2 or 3 times, we got a 40, 50% type of drop in the market, over 30%. Where are we right now? And what are the steps? Every downtrend that happens, y'all, it's the same sequential steps. This is math. This is math behind all of it. There's a lot of good traders and scammy traders posting a lot of content. This space is just, it's open wide. It's just opened up. I've been doing this for like 13 years now, right? Teaching and trading. The teaching with Limitless started like 2012, but really my journey with trading, futures, advanced. Most people don't trade futures, can't trade futures, never will be able to. And you don't need to. You don't need to, right? Been doing this for a second. And unfortunately, I see a lot of really bad advice. I feel for people who really don't know enough because I see so much and there's so much information. It's like, where do you go, right? So what we're going to do today is, like I said, we will take a look at the last recession of 08. I want you guys to be able to compare that to where we are now. You should be able to draw some really powerful insights from simply doing that. And I want to show you so you can see it. Insider Trading is actually a group on Facebook that myself and my cousin Joe Harrison, what up, Joe, started about 10 years ago. We got 30,000 people in the room that we attempt to educate and build some culture around, and just great community of people. So I don't know where you're watching this. You might be watching on LinkedIn or YouTube, tons of different, I got like 7 different, I'm streaming live in like 7 different places right now. But if you're looking for just, good community, you find yourself on Facebook often, put yourself in the room with the right people that are making money, getting educated, learning, and everybody's getting better and growing. Why? Because this thing called wealth, this trading thing is very serious. It's very serious, right? So I just want you to take it serious because of what it can do for your life. I always ask before I go live in Insider Trading, if you're in the room, this is why there's a benefit to being inside the room. I'll say, hey, I want to go live. Y'all know I do this. Joe does. He hasn't been doing more, not Christmas, but holidays, spending time with family, which we as educators have to do, right? We can't give you ourselves all the time, right? All the time. But dang, what was I about to say? I lost my train of thought. Anyway, man, let's pull up a chart. Let me do that. And what I'm going to actually start with, that's what I was going to say. I was going to say, if you're in the Insider Trading room, the group, I'll often go live and say, hey, what stocks do you want me to take a look at? So you can get real-time live analysis. Nobody does this. I don't think y'all realize, like, nobody does this. Even on the live shows. I mean, yeah, but they've had time to massage it and come up with their whole spiel. Right, this is going live from an expert who knows my craft. Right, I've spent 20,000 hours literally trading, losing, making, teaching, learning, building, growing myself. Right, trading is it's a beast of a journey. It really challenges you to become the best version of yourself because it forces you to live with reality. If you're not making money, you're not a good trader. Right, everything else in life, you can kind of think you're a good principal, a good president. You can think you real good in a whole bunch of professions. This one will humble you because you get a really, really clear picture. Your account is growing or it's not. All right. It's brutal. It doesn't care about your feelings, right? So let's see. My guy David Martin said, "What's up, Noble? What we talking about today, millionaire?" Oh man, we talking about the market, man. Talking about the market. So shout out to David, man. What's up? Glad you're joining. I want to say this really quick too. This is interactive. So if you guys have questions, click the little button wherever it popped up. If you're watching on Facebook, you can type in, you can ask me questions as we go. That's why I do this. It's to get as close as you can to somebody like me who, once again, literally, y'all, I literally spent all of my 30s. I'm 42 now. I spent all of my 30s trying to master this thing, making money, being educated enough to know how to trade all the markets, which is why I call it limitless, right? I can trade options, I can trade foreign exchange, I can trade futures. That's pretty. Now I know crypto. Yeah, okay. Mm, I don't often talk about crypto for a couple of reasons, but I know it's a huge market. Once again, the principle is if you can read a chart and you understand the data analysis behind this and you approach it seriously, not like you're gonna learn how to trade and leave your job in 6 months. That's not gonna happen. It takes years to become a professional, a master of anything. Anything. So why would y'all think that this would be any easier? If you just wanted to become a dope plumber, that's gonna take you that might take you 10 years to become like, you know what I'm saying? But we think with trading, we could just hop in, grab some little class. And unfortunately, I gotta say it, unfortunately, in this space with a black educators, a lot of us, I'll say them, a lot of them preach to y'all how easy and simple this is. And then you get into it and realize how hard it is and how challenging it is and how much you need to learn. And that learn ethic is the tough part. And then you get a little bamboozled. So I'm just this year I decided I was like, you know what, as much as I can, I want to educate in a way that keeps it simple for you. You first have to have mastery before you can simplify something. Think about that. You have to have mastery first before you can simplify something. All right. We think it's you start with simple and then you get mastery. And it's like, yeah, you need the concepts to be simple, but at some point, there's just hours and hours and hours and hours of time and repetition and reading and rereading and talking to friends and looking at the charts and memorizing these patterns and learning that there's no way to get around that part. That's the work that you have to do. You don't get that from anybody's course. You're going to spend hundreds of hours if you truly want to master this. So I just been honing in on like my audience. All right. My audience are those people. Not that you have to have 4 or 5 degrees, but educated people who have a high learn ethic. You're going to do the work. You get how powerful this can be. You don't want it. You don't even believe in the get rich quick. All these people with $1,000, teach you how to make $1,000 on futures and the class is $200. That don't even sound right. Don't even sound right. That makes no sense at all. It's a hustle. It's a hustle. All right. So once again, Andre Swanson said, "Yo, let's go. What up, Andre? It's my guy." And Christopher Johns said, "What's up? What's up, bro? What's up?" So I'm just diving into it. That was my whole spiel. I always say the same thing. Just be careful, you know, with the education piece because you actually don't want to learn so much stuff that you get confused. And I see a lot of people doing that. You're watching so many different trader educators, people, and all of that information. It's like, it's like trying to learn how to cook from 5 different chefs. They all got different styles. Like you kind of making it harder for yourself, So just be careful. Anyway, my guy Charles Holland said these markets are not for the uninitiated. Nah, they not. This will teach you something about life. It will. Somebody, I don't know. I would put a little student. Love that. Facebook users put up the little student. Okay. So let's dive in. So here's what I'm gonna do. I guess I got a clean chart. For those who are like, I have no idea how to read this. No worries, no worries. Don't worry. I got you. Don't worry. We're gonna keep it real simple today. I'm going to keep it simple for you. Right? Mastery to simple. All right. So I'm gonna take my mastery and make it really simple for you. These are month charts. Every candle, these are candlestick charts. I'm gonna give some of the terms because I don't often do this. I just kind of go because I'm used to a lot of you guys who know how to trade, are trading, working on getting better as we all are. But The red candles simply are, they just represent a month where price was down, right? So this, I'm gonna go here, right? I'm gonna go to August. So the month of August, candlestick reading in its simplest form, and I used to teach middle school kids this when I first started. This is where the price opened last month, August. All right. So we opened at a price of 41.13. We went as high. All right. We went as high as 43.27. But by the end of that month, right, at the end of the month, oh, we came down at 39.55. 39.55, right? So just classic stuff real quick. This is your open. This is the highest price, right? And this was your low, but it was also what's called the close, or when this candle closed at the end of that time frame, right? So you got these 4 data points. So think about it. You've seen like COVID numbers and all these different types of things. Usually it's just a line chart. It's just going up and down. The Japanese 200 years ago developed candlestick charts, and they're really genius. Why? Because instead of just giving me one data point saying, hey, today the market closed at 300. Well, how high did it go? Did it go lower? Like, what was the story of the day? You can't get the story with one data point, right? Think about dating. You can't learn something about somebody. You can't learn anybody with one date. It's not enough information, right? This is information-based learning, all right? When you're looking at a chart, you're literally looking at data. I know that's not sexy, but I'm sorry. I got an MBA with 7 years of business school training. This to me is just data analysis. I don't know what people conceptually think of it as, but that's all it is to me. It's just data. This could be grades. This could be points per game in the NBA. Like, this could be anything. It's just data. It's just numbers over time, fluctuating, right? And we use it to make money and wealth, right? Which is why it's important to learn this stuff, right? So that's the 4 key pieces, right? And then let me take that stuff off. I'm actually gonna jump over to I'm gonna go to NASDAQ real quick. And once again, these are month charts. So I'll show you where COVID was, and then we'll kind of come all the way to where we are today. So COVID was right here. I'll put it after that candle, right there. This low right here. That, my friends, this low right here, that was a COVID drop. March 2020. Since then, we had, let me kind of draw this out. I want to tell you guys how long it took, and then how much, like how high the market went, right? So from these lows, March to November of last year, right? That is 21 bars, so that's 21 months. Each one of these bars is considered a month chart, right? So that's 1 month of data, 21 months you're looking at. From the low to the high, that's 150% growth from the low on NASDAQ all the way up to this high, 150%. Right? 610 days. Yeah. Right. You don't need to know the days. 21 months of growth. Right. And what do you see now? Now, it looks a little different. Now, for the last 8 months, we've dropped about 35%. Last 8 months. All right. So once again, give some context. It took us 21 months to go 150%. Everybody was just, oh my God. And for somebody who's been doing this 10 plus years, I've seen the cycles. And I hate to say, but a lot of folks who got really excited about the market because COVID put you at home, the pandemic, you're at home, you're hearing about people trading, you heard about GameStop. It was like, oh man, I got to get in this thing. I got to get in this thing. And that's cool. I love that you're here. I want you to be an investor for life. I want you to become a good trader. It takes time. All right. But so many people in this period here are going to get beat up, burned out, lose money they've made. And some of you guys, when it's all said and done, when this recession is over and we actually get back into an uptrend, which literally may take 6 months, may take 2 years. I don't know. I know how to trade it. I know how to benefit on either side. A lot of you guys are going to get beat up so badly that you're going to do like a lot of people did during the 2008 recession, and millions of people stopped investing. Like the volume pre-recession 2008, it went down. And here's the crazy part about that. Let me go back to the recession really quick. If I go back to the recession, look, the recession was here. All right, so I'm gonna take that same line. That's the COVID line. Right. The low of the recession was all the way back here. Like, look at what happened in this period. That, my friends, that's what you don't want to miss. That type of clean, very clear buying month after month after month with very small pullbacks. Pullback is considered like, 15, 20% drop from the highs. We were cruising for like 10 years. That's 2009 to 2020. And then even after COVID, we got another strong, almost 2 straight years of crazy bullish, very volatile, simple, going straight up activity. I don't know what else I got to show you to get you to realize that you can make money in the markets. It's not a question of if, but it just requires time and education, and you're not going to learn it and master it all overnight. You know, I'm getting a bit more cognizant of how many people go about it the wrong way. Right, jumping into day trading without the skills and the experience and right. And I get it. I kind of did the same thing too, but I also was making 6 figures. It didn't matter if I lost the money. I also started with about 25,000 in my account because my dad had passed away. So I literally could have blown 25, 30 G's. It wouldn't have mattered. I still was making 6 figures 10, 11 years ago. That's not everybody's situation, right? And so individually, right, you got to pull back from this thing and realize this is about, a high level of aptitude to want to learn it. It's about a high level of practice with the material. I can take 2 students. Matter of fact, I'm gonna come back to that. I'm gonna come back. Let's get back to the charts for a second. I'll come back. Y'all know I try to give you little gems here and there. But anyway, my point is this: recession was bad. Let's look at how much that drop was. What percentage was that drop? Let's look at it. Recession from these highs to this low was how much? I can't see my thing. It was about 54%. That's a big drop. It's 54%. So the first thing I want to show you guys is this. If we were to just repeat, nobody wants this to happen, but it's possible. I need you to understand that it's possible. The last 2 major dips, the recession of 08, the dot-com bubble bursting right around 2000, they both were like 50% drops. That's a pattern. When you see a pattern with trading, you better start, right? We pay attention to patterns. All right, so where's 50%? The funny thing is 50% drop for us would essentially be right here. All right. Right here. Right back in that same candle. If I put a box and drag it across, the box that created, that month, this month right here. All right, that made the really bad. This month right here, this red candle. That month, if we get all the way back down, right, into that candle, that's essentially, that would be equivalent to this recession becoming what every recession tends to be, a 40 to 50% drop in the market. So I'm telling you, if this gets worse, I'm telling you exactly where we're going. This isn't rocket science. Honestly, this on some level isn't special, although it is, because once again, years of seeing these patterns and studying, yada, yada, yada. But I'm not predicting. I'm using a very logical, systematic approach to say, hey, the last major dips and drops in the market, which created a downtrend on the month chart, they ended up dropping about 40, 50%. So if we're experiencing a recession, why is nobody saying, well, how far did the last few go? I watch the same shows y'all watch. They don't even talk about this stuff the right way. I'm like, what are we doing? Like, some of these shows are so bad to me. I can't lie. They give you a lot of information, but not the stuff that matters. I don't care what the CEO is saying. I do, don't get me wrong. Sure, let's talk to the CEO, but then pull the chart up, because I don't care what he or she is saying. The chart is what tells the truth. Price does not lie. People do. Traders do. Right? Gurus do. Marketers do. Right? There's corruption. Anywhere you put money and value and human beings, there's going to be corruption. You can't trust everybody. right? So that's why I'm huge on the technical analysis, because if you learn this, you don't need anybody. You really don't. You can make your own conclusive decisions based on the actual clear it is what it is, right? So that's where at worst. And think about it, y'all. If we get all the way back down there to 9,000 on NASDAQ, you already know where we're going. We're going to 7,000. We're just going back to test those lows. We do it all the time. We do it all the time. Matter of fact, let me show you this real quick. I got to go back to the recession. Let's look at the recession. So this is the recession of 08. All right. And I'm going to do the same exact thing I just did. This lowest bearish candle before we pop back up. If I drag that all the way across, that's right here. Look how deep the recession went. Where did we go? We came right back to the exact same lows from this crazy monster of a drop. Right? So this was 2000 bubble bursting NASDAQ. Ooh, that's a lot of value lost. Matter of fact, let me check that and see how much was that? What type of drop was that? Let's see. So that's from March. Wow, March 2000. Everything happens in March. That's from March to October. That's an 83% drop, y'all. So the market dropped 83%. Started to get some bullish activity from 2000 to 2008. Oh, subprime mortgages, blah, 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 crash. Oh, where did we go? We just went back to the same low. That's all. So if this happens again, very just simple logic. Where are we going to go? The exact same low. Somewhere around this 9,000 to 7,000. If it gets worse. I said if. All right. So let me hop over to the S&P real quick. Take everything off my chart, and then I'll just do this and let's kind of go. So let me just kind of give you guys a few quick things, right? So right in here where the market got stuck, this was September. Right? This was September of 2020. And y'all see how like for 3 months we really didn't go anywhere. September. The next September was here, September of 2021. And if you kind of pay attention, we got above it and then we danced inside of that candle. All right. We danced inside of September here for 3 months. We danced and we got out of it and then we came back and danced inside of it for another like 4 or 5 months. All right. What month is this? What month is this right now, y'all? What month is this? Now, I'm not saying the same thing is going to happen. I don't know. But if we look back at the last 2 years and something seemed to happen, September historically being like the worst month of the year for the last 2 years, that's when the market got stuck. And in the last year, even when we got above it and started to make new highs, we came right back in and then the market got really tough. Right. There's a phenomenon called the Christmas rally. What is that? It just means the like last 2 weeks, kind of after Christmas, going into the new year, prices tend to get a little surge, right? Stuff tends to jump. Balance sheets of, been kind of everything's done for the year. Christmas, fourth quarter, right? We got tons of buyers. It's the best season for merchants. You got Black Friday, Cyber Monday. You got all the deals. Then you got people allocating budgets, getting ready for the new year, getting ready, right? So all of that activity, it tends to give us what's called a Christmas rally. At the end of the year, we get a little rally. Market moves a little bit. Yes. But did we get that rally? Let me go back and show y'all. Did we get that rally last year? No, we did not get the rally. Matter of fact, I'm gonna get rid of that. No, I'll keep that box and then I'll put this on a week chart. So now I'm just getting slowly. If you realize what I'm doing, I started with the month. I went to the week now. Oh yeah, that's it. Month and the week. That's it. I was like, hey, didn't I do another time frame? I didn't. And so for me, think about it like this. The reason I like to start with higher time frames is it's easier to see what's happening. If I was to start my analysis and say, yo, let's look at the hour chart. Why? Why the hell would I look at the hour? Why? That don't make sense. Even the day. Why would I start with the day chart? I want to see the whole bigger picture. I want to see this thing clear. So there's no need for deep analysis. I don't even want to think yet. Right? You gotta conserve your energy as a trader. Start with the higher time frames to get the picture. I'm amazed at how people will jump on a weekday or a day chart specifically. They're like, "Oh, I think we're bullish," and it's like, "Yeah, we're making a little bullish move, but do you not like? Are you not seeing that there's been a monster downslide? Like the stock you looking at is down 75%. Why? How do you think this is up? This is an uptrend. This is bears who have made money just easing some pressure off the gas, which lets bulls for a little second get a little couple weeks of a run. It's still bearish, right? So I'm gonna go back here for a second. Let's go back here. Um, so here's what's interesting. I'll take this box and I'll leave. Actually, I'm gonna take that September area that I marked off, but I'm gonna go up here, right? Because what happened? Let me actually zoom back just a little bit. What happened up here? This is like what technical analysis is. When people say, "Can you read a candlestick chart?" Yeah, if I said, "Okay, these candles are green," that means price went up. If it's red, that means price dropped. That's interpreting a candle. That's not reading a candle. When I say like for me as an educator, when I say, "Can you read a chart?" I mean, can you understand what both bulls and bears are doing and why? Can you give specific places where bulls care about these prices, support levels? Bears care about these prices, resistance levels, because they have their stops above, their stops below. And the way that this works, when one side starts losing, the other side starts panicking. That's what creates these trends. You only get a trend when like one side, it's like tug of war. Whichever side is stronger, that's where we're going. All right. So it's important to kind of write in here. Right in here. Here's where this was November. All in here was basically November, December. And what happened right in here? I did this live. I did it live. You can go back and catch all these lives I've done. All right. I was like, we're ranging. We're not going anywhere. When you start to see this, I said, oh, this don't look good. All right, we're ranging. We're ranging. Doesn't look good. And what do I mean by ranging? I mean, it's just the area, literally. You can just kind of connect those. It's an area where we hit at this high, we hit this bottom of like 45.10. We back up. Oh, we came back down again. Same area, bought it up. Oh, tried to push, didn't have enough buyers. We coming back down. All right, and then this candle here, when we firmly closed under all of this attempting to go up. All right, think of all of this as confusion. Just that's all it is, confusion. Neither side was really winning. You had a good week for the Bears. Then the Bulls brought it back up, and then the Bears dropped it, and the Bulls won. The Bulls won, and then the Bears, right? It's just both sides, right? We're not really going anywhere. There's no trend here. There's no trend. There's no clear direction. And when you start to see that, recognizing that this is after a really great 21 months, that 21 months was not going to continue forever. That's all it is. Everybody's always trying to predict when is a crash coming, and it's always these predictions, man. Stop trying to predict. Learn how to actually do this and read the chart. Like, learn the skills. I'm never like whimsically like, oh, I think, I'm never trying to predict. All I can do is use the tools that I've learned, try to understand the math behind these indicators that help me apply them in a very objective way, and simply read the chart. It is what it is. I don't care what you think about the recession. I don't care what you think is coming. It doesn't matter. I don't care how you feel. The only thing that matters to Noble is what are these charts saying, and what is the math behind this saying? And then can I go back and look at some things in the past to try to give myself a gauge of where we are, right, compared to things that have happened in the past. That's it. That's it. All the guessing. All the gurus who love doing all these deep talks about their philosophical thoughts on all of this stuff. I mean, don't get me wrong. There's people who definitely have a really great insight into macro level, economics and how the economy functions and jobs and right. Yeah, of course. And it's fun to hear that stuff. But at the end of the day, you got to be able to read a chart. You do. I'm sorry. You got to be able to read a chart. And really understand and comprehend what you're reading. So what's my point? My point is this. September, you should have known back in September that September is a tough month because you should have known that from the previous September. And it's one of the most widely known statistics any investor or trader should know. September, October, really September, worst month of the year, generally speaking, right? So that tells you something. This month, this was September. We kind of had a little dip. Ugh. Then we got back higher. Cool. Okay, cool. We got above September, but then we started ranging really, really bad. And this was over 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It took 12 weeks. It took 3 months to kind of work out that the market is kind of stuck. It took 3 months, y'all. 3 months to work itself out. People are always like, and what my point with that by saying that 3 months is the constant predicting and like trying to figure out what's going to happen next and who's right, who's wrong. The market will show you, it'll tell you what's coming if you just are patient enough to do the work. When you see a range and we keep hitting the high, but do not get enough buyers to go higher. After a 21-month crazy best uptrend for of probably the last 30 years, that was the market in December telling you, I'm stuck. Oh, I'm slowing down. Something's off. And then let's keep going. What happened in January? All right, so we closed under. So I'm gonna put a little box here over this candle this week right here. Why? Because that's the week that finally got us out of this area and said, ugh. All right. Finally came out of that. Now, if I do this, y'all gonna be mad, but I'm gonna do it. If I do this, all right, drawing these little swing lines, this is just a classic, y'all. Classic downtrend. If you didn't make some money this year, you got to start back over. You got to start from scratch because you just can't read a chart. And this is basic. Like this really is basic stuff. We came out of a range. We broke out of a range. Continuation down. Doop, made that first little point, that first lower low. We pushed back up and immediately price came right back down to make a new low. We're starting to make lower lows without having any special indicators on this chart. You got to be able to see that. And I'm on the week chart. So for those of you guys who are like working professionals, you know, you're doing your 9 to 5, maybe you're in corporate making 6 figures. Hell, you know, you managing a franchisee, you know, you guys are working. I just met a guy. I was in an Uber the other day. We had a real great conversation, man. I was trying to get him excited about the market because he was telling me, you know, as a truck driver, he can make 3,000 or 4,000 a week. And I was like, what are you doing with it though? He wasn't trading. I'm like, man, you don't even understand money. Like you're working too hard. I don't want to work hard when they created this. What? Nah, I don't. So anyway, so 2 lower lows. Let me just put a little note here. Let me put the little note here, right here. This was a low. Get back around and we made a lower low. Right. Even here, where we pushed up to, right in here, right? VIX popped above 30. I'm gonna just give y'all some extra gems for those who know about the VIX, because I'm talking to newbies and experienced folks at the same time, which is hard to do, but I try to do it well. So some of the new folks, you might not understand everything I'm saying, but don't worry, that you will in time, right? So right here, all right, this last swing high, where is price going? VIX hit above 30. We slowly got that move. Okay, cool. But the VIX hit 30, but we're also in a downtrend. So you kind of almost need to flip how you look at the VIX when we're in a downtrend. It's the bottom you need to worry about, not the top. All right. So yeah, you could have bought this here, but I would have preferred you to be short in some puts here, because all we did was go back to the exact same area that makes perfect sense. We went back to test this last high. You got a candle here that's a doji. All right, this little candle that's a little cross. It represents confusion. It represents confusion, perfectly where we knew the market should go. All right. We came out of that candle and essentially under this one, we started dropping. We had a little pushback up right here. This probably threw some of y'all off if you were short, right? If you were to buy some puts anywhere up here in this area, right? Knowing we're in a downtrend because we're establishing lower lows. Knowing how to really, really, really read the VIX, not the basic stuff people throw out for free, because I mean that stuff helps, but there's more, right? And this little wick, strong, attempt at bulls to push us back up into here to kind of shake you out in your trades if you were short. And literally think about that. Look at it. Look at this, y'all. Like, look at this for a second. This little wick right here, this wick right here on this candle. Where did it go? It perfectly went to the bottom of this candle. Why? Because the people who got really aggressive and started shorting here, the market loves to like bring it back up to where people really want to get in. But if you were in early, this is where you're gonna be like, oh, I was up, I was winning. Oh, and it came all the way back to break even. Oh, and that's why trading's hard, because it's not gonna make it easy for you. And you still were right. Right. If you started shorting the market right here under this candle, you were right. But it dropped 2 weeks for you, and then it pushed all the way back up. So all your profits went to zero. And then it gave you even more money right back. We had 7 really down. This basic stuff. These 7 weeks right here, you should have been, I mean, somewhere in here if you were options trader. And I'm gonna speak to my options folks in a minute. So where are we now? Where are we now? Well, we went back here. All right, we went back there. All right. Had a little pop. VIX spiked. Got to flip it though. Went back down. All right. Got some buying. Got back above this area here. Cool. Really strong push through it. Where's the next level? Right here. All right. And now flipping back. So I'm gonna use some tools. I don't always jump into random tools, but just for fun, because let's look at Fibonacci real quick. Matter of fact, yeah, let me do that. Let me look at this quick Fibonacci, right? Just to see how much have we pulled back. Right. So this move right here, we pretty much just touched this area right here. We just touched the 61.8% retracement. What that means is from this low to this high, for us to come perfectly down 100% to fully retrace this move from the low to the high means 100% is here, 78 is here, 68 is here, 50 is here, right? So it's just mathematical levels that say, hey, if we drop 78%, right, meaning if you perfectly bought back here, right now, right, the more we come down, the higher the chance is you're gonna get a little scared and get out. That's all this is. You got to understand both sides at the same time. You got to, like, to really be a good trader, you got to be a bull and a bear at the same time. You got to understand what both sides are thinking based on price. Psychology, yes, but the psychology is related to the price, because if I was in a trade and I bought 1,000 shares of Apple and I was up whatever percentage Apple jumped up in these last 8 weeks, and these last few we just started sharply coming back down, now that's gonna mess with my psyche. Why? Because I'm losing money that I could have took. Am I gonna stay in? Am I gonna bring it to break even? Am I gonna take some shares off? Like, what am I, right? That's what's constantly happening, is people are panicking or confident and making decisions based on how price is moving, right? Based on getting a good entry or a bad entry, or being late to the trade, or getting in right at the high. Some people just got in like last week because you thought, oh, this looks pretty good. No, that wasn't the time to get in. That wasn't the time to get in. Let me check my comments real quick. Christopher John said, I've been on charts every single day after working before and weekends, just trying to get better, paper trading daily. Yeah, man, I love that. My story, I ain't about to give y'all this long spiel, but when I first started trading futures, I learned what they were. I learned that I could, make $1,000 a day. That blew me away. I was like, well, I can make $1,000 a day. What? Why am I working? Right? I didn't even know this existed, right? And with that type of, money, and this, you can do way more than that. But anyway, I learned about futures. I was like, man, I see this as something I can really take serious and master. And it might take me 10 years. I literally 13 years ago, when I first got introduced to futures, my first thought was, dang, this seems really hard. It may take me 10 years to like really become good at this, but I'll do the work. And I've done the work. And I'm really good at this. But it wasn't easy. oh, there was some sacrifices and some pain and years of struggling and trying to figure it out and trying to relearn and learn, just oh man, trading is not for the weak. It's not for the weak. So that's great. I love that. And then I paper traded for about 9 months. For those of y'all who really know my story, I paper traded for 9 months. Went to this moneyshow.com conference in Las Vegas, literally 12, 13 years ago. There was a foreign exchange trader named Kathy Lynn. Look her up. Stuff is great. She was like the first professional trader I learned from, and she showed us her 3 strategies in her session. It was mind blowing. I was like, oh, this is serious. Like, I learned from her that people, like, this is a business. Like, she had every single rule of when she takes a trade, why, if she loses, when she'll stop, indicators she's looking for, the exact levels, like everything's planned out. Everything is already planned out. Like, just literally just like a business plan. There's no like, oh, let me just get in the trade. Like, I was like, okay. And that helped. That put me on the right path. So I paper traded for 9 months. First trade, I was trading silver futures like 3 a.m. I made like $650, $675 in like 5-6 minutes. I said, oh my God. Oh my God. I think I'm gonna stick with this trading thing. Those first 6 months were glorious. Then that European debt crisis hit. And my one basic little strategy, which was like waiting for a Bollinger Band to get poked, wait for a really strong pierce of a Bollinger Band, just go the other way. It works in low volatile markets, but how do you know if there's low volatility versus high or normal? Right. So I started losing a lot. I couldn't win after being really, really, really successful, making 500 to 1,000 every other day. You know what that takes to live through that? You know what I mean? Like, it's serious stuff. Charles Holland said gems. My guy Dealey says so. It's pretty much assured that it'll go back to old lows versus higher lows over time. No, it's not. You rarely gonna hear me use the word assure or guaranteed. All I know is that the market is guaranteed to move. We going somewhere. We're going up or down. Even if we get stuck for like a whole year, we could literally range for a whole year and go nowhere. We could have an entire year that's flat. I don't care how hard you try to trade in a year that's flat. By being flat, that means there's no trend either way. Nobody can really make a lot of money unless you know how to make a lot of money in ranges with options. So let me talk about options for just 2 seconds. Just 2 seconds. So I did 4 workshops recently. They were really dope. Real soon for those who attended, because you guys know I got the upcoming 8-week class. I changed it from 10 to 8 weeks because I'm gonna just kind of, some weeks will have more sessions, right? So I still want to like get y'all done by pretty much like right around Christmas, right around Thanksgiving. Like the week before Thanksgiving will be week 7. So I'm gonna do an 8-week course. It's gonna be really, really powerful. I'm not gonna lie to y'all. If you realize how much people like me, like I think of my classes, like I learned product development from a corporate perspective. So I've had several options classes. They were just pilots. They were dirt cheap, $500, $700. You can make that back in one trade, right? And I did that to really try to figure out, how do I teach this in a way that nobody else is? And I think I got it. Matter of fact, I know I got it. Because these workshops that I did were really, really powerful. The feedback has been amazing. I did surveys. I tested people before and after. And I know that most options traders don't fully understand options. They don't. You don't. If you just started trading in the last 2 years, you probably don't know what I think you fundamentally should know. Right? Which is all of your different options for options. I just had a trade. I don't take a whole bunch of options trades. I don't. I've learned less is more. Y'all know I've been saying that all year. Less is more. I took a trade on the Dow because I was waiting on Apple. I was waiting on Apple to go where I wanted it to go. So I took the same kind of setup, this trade on the Dow. I wouldn't even get all super deep into it because I'd have to explain way much more than I want to explain right now. But it's something I'm going to teach in this next class. Something I learned kind of over the last year. You know, I had to lose a little bit, and it took a lot of reading, like even for me. Right? I got several options books. everybody explains this stuff terribly, horribly. Oh god, it's just terrible. Even the best like folks on YouTube that have a ton of followers because they like specialize in options, they still explain it really, really in a complex, convoluted way. Middle school kids can't learn from that type of teacher, right? So that's always my focus. Like, can I break this stuff down so well that literally a kid could be like, "Oh, I get it," right? And that's always been my principle with Limitless. If a kid can get it, I know I got adults, right? So this trade I took on the Dow recently, you know, I'm still in it. I took most of my contracts off because I was up 200%. And I actually went both directions at the same time. I was gonna win either way. Now I know that sounds like, well, wait. Hold on. What you mean you're gonna win either way? Because of the rigor behind the trade, because I know what to trade it on and what indicators to pay attention to and what stocks not to do this on. And there was some testing. And I just told y'all I took a year of kind of like, real money testing and reading blah, 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 blah. But yeah, now I got it. I got a very simple, it's something I want to teach in my class. Because think about it. What's 99% of trading? 99% of trading is if you get the trend direction wrong, you're gonna lose. That's it. You get the direction wrong, you're long and the thing is coming down. You bought some calls, but price is coming down. You're done. But options is so amazing because you don't have to even have a direction. Oh, it's this next class is gonna be crazy because I'm just teaching the more advanced strategy. So anyway, I ain't trying to sell y'all on the class, but I am trying to get you to understand that if you don't understand your options, your strategic options of how to use options to make money, if you don't understand the options, you don't get options. You really don't get it. It's one of the most amazing things ever created. Period. It's like the ninth wonder of the world to me. It really is. So, you know, I'm gonna go in. We're gonna have some fun for those people who sign up. And this workshop was really good. It gave me a lot of, a lot of good feedback, just, I try to create my courses based on real conversations with real people and the data and seeing and testing things. I asked one question. One question. I put all of these different names for different types of very classic strategies. And like almost nobody out of 300 people knew any of these strategies. So it's like I know what to teach, right? And I know what you need. And I've taken, from that first class that I had a couple years ago, I started kind of with just technicals and then I taught it a little bit different, So now I'm like, okay, I had to grow myself. I can't teach y'all stuff I haven't done. That's integrity. I wouldn't try to. All right. So anyway, um, to Dealey, go back to your question. That was the longest answer in history. You said so it's pretty much assured that it'll go back to old lows versus higher lows over time. No, I wouldn't say that. I'll do it like this. Let me pop this up real quick. I would say this. I'd say this. If I pull the most random stock I could think of, Macy's. I don't even know why I went with Macy's, but Macy's. No, I don't want to use Macy's. I need something with talk about something nobody's talking about. Tilray. Weed stock. Let me go. Let me try to find. It's kind of like this, right? So for me, in a really simple way, um, like when I got, because you got, y'all know, I started with futures trading, which is kind of like the most advanced stuff. Right? It's brutal. You think options is brutal? No, futures is brutal, right? Because you don't have time. With options, yeah, you can give it enough time. You give a contract 6 months, it can work itself out of the downtrend back into the uptrend. You still will be fine, right? And that's how you're supposed to use options, right? The problem is everybody's trying to be a day trader, right? So what's my point? My point is this. When I used to get confused with the chart on futures, 1 minute, 5 minute, 15, I get confused during the day. So I started drawing like the swings, right? Connecting these highs and lows so I could just kind of see things clearly. Right. I've created a lot of little things for myself to just help me stay clear, right? So when you have this here, this low, right? Matter of fact, I'll kind of mark it off, I guess. Same basic concept. You got this low, and then right here, we got a lower low, LL. So we made a low, had a little pop, lower low, right? After that, just that, a low and a lower low. already, I mean, if we keeping it real simple, yeah, I'm expecting price to do two very simple things. I'm expecting price to go back to the last swing high or to the last swing low. And did we do both? Yeah, we did both. Right. We made a high here. We didn't get there. We got really close. We dropped and made a new lower low. Still had a really strong week here. And I literally have not looked at Tilray in forever because I didn't trade it and could care less about it. Right. But the concept works, right? The technique made a lower low, ran back to this swing high. Ooh, really strong month. I mean, really strong week. And then, ooh, a hammer candle. Ooh, that's a sign of a reversal. Just this candle by itself. Not saying you should always take it, but in something with a downtrend, you could have very easily been like, all right, well, I'm gonna short this right here, and I expect it to go back to the low. Right. So when I see highs and lows, that's just like that's not even for me, that's not even like really thinking. There's no real work put into that analysis. It's just that's the nature of the market. All we do is go to back to old highs and lows. We can't go lower. Like we can't get into a worsening recession unless we get back to the lows and then make a new low. Then we'll have a little pop and people will be like, oh, that was it. That was the worst. And then it might go back and go lower. Right. So it's just, very, very, very core fundamentals. Right. Core fundamentals of technicals. If you start to see lower lows, the market is telling you, it's telling you something very, very, very powerful. Right. And it's the same thing when we start to experience higher highs. Right. So let me even do this real quick. I'm gonna go. What did I do? I hit NASDAQ. Let's go to the Dow. Oh, I got a whole bunch of stuff on here. So let me get rid of all this stuff. So this is the Dow. Right. So looks a little different, right? Not, but this was out of COVID, right? It's been a bit tougher. The Dow doesn't move the same way the S&P and NASDAQ does. So let's just look here. Right. This last kind of major, downtrend from like December to now. Right. What did we do? Same thing. High to low. Pop back up. Ooh. Ugly candle right here. Push right back down. New low. Strong, really, really strong push. Ugh. Right. Crossed over this last swing high. Went right back to that same place. Ooh, and then we had a hammer. And that's like a very classic hammer. Long wick. Meaning we had a really good week. And then, ooh, bears. Like, well, we started collapsing. And we started collapsing. And then where are we now? Where are we now? It looks like we're headed right back down to the low. But here's what you don't see. You don't see a high and a higher high. Right? You don't see that. All right. So that's for me where it's like, yo, nobody should have been crazy excited. You got a low, a lower low. So we had a low back here. So we got a low. Ooh, new low. Push up. Ooh, new low. Ooh, we trying to go right. But here we don't. So yeah, this was a high. This was a new high. But there was no preceding pullback, and then we need a higher high. Then okay. Then I'm kind of like, yeah, okay, we might really for real be recovering. Right. So it's basic stuff, basic and advanced. I mean, basic because this is the stuff you should be learning from day one, but advanced because over thousands of patterns, right? Overseeing this analysis thousands of times in a 5, 6, 10 year period. This should be, you literally should look at the chart. You don't even have to think, right? And that's the thing about trading that people, I think, a lot of times us as educators don't do the best job. And I try to do a best job. Clearly, I'm saying it, but a lot of people don't really get. I think explain this journey. You can learn from the best. You could watch me trade every single day right here in my house every day. You could take my same trades and have more money on the table and make more than me. I don't care. I want to make students that literally are better than me. Right. I think that should be my goal. But dang, where was I going? I lost my train of thought again. um Oh, what a lot of us don't realize about the journey is a lot of the wisdom and confidence and that grit to take the trades and then start scaling and making bigger trades with the same basic stuff, but bigger trades, more money on the table. It comes in time. I can't give you 5 years. I can make the world's greatest, most perfect class. It could be a 6-month class where I teach you every single thing I think you need. And you practice this and you come out of it ready to trade options, any strategy, any direction, even if there's no direction, doesn't matter. Butterfly, strangles, iron condors, double iron condors, all of that. Futures, foreign exchange. But you still, it's only 6 months, right? The deepening of that knowledge comes with years of seeing this stuff work. It comes with years of time, hundreds upon hundreds of hours. All right. I don't know. Somebody said, "Do you judge the reversal on RSI on a daily, hourly chart?" So RSI is relative strength index. I don't use RSI. I used to. I mean, I probably tested and have used everything over this journey. I like the stochastic RSI. I don't like RSI by itself. I think the stochastics is a little better. It's a little sharper. Do you judge the reversal on RSI? Dang, I almost would have to like get an example or find an example um of the reversal or of a reversal happening. Matter of fact, let me check something real quick. I'm gonna just lead this up and I'm gonna throw a stochastic RSI on this real quick. Oh, this is okay. I forgot. I'm like, dang, I ain't used stochastic in so long. I forgot what it looked like. Okay, so this is one of those with like the levels above 80, below 20. I'm trying to remember how to read it. Usually these types of indicators, which I think is an oscillating indicator, is it's kind of like it'll tell you when something is overbought, right? And you have the two classic lines. Usually this is two moving averages, and when they cross, it's like the cross is telling you something, but then being above the 80 is telling you something, right? So if I'm using this the right way, which once again, y'all, I haven't used stochastic RSI in a minute, so forgive me if I'm wrong. Don't take this as gospel. But right in here, right in here, those two lines, well, actually here, they merged. But right in here, 8:15, when we got that doji, they started to cross. Now you won't really see that they crossed until after. You won't see it like as things are happening. That's when this stuff is most confusing. It's always clear after we go back and look at it. It's always clear. That's why I try to do these live and stuff live with you guys. And it's not like live real market right now moving because I'm trading, trying to make money too. And I don't even trade every day anymore. I take Wednesdays off. I feel real good about that. Except when Wednesdays are really great days. I'm like, dang. Right. But they started to separate. Right. We got this gap down here on the Dow. I mean, yeah, this is on the Dow. So we had a gap. So from that Friday to that last Monday, we gapped down. Ugh. All right. Stochastics was saying, hey, I'm above 80. I'm oversold. If you knew we were classic and we were still in a downtrend and you wanted to make if I had to use stochastic RSI and I'm an options trader, right? What am I going to do? I'm going to wait until it gets up here. Now that's how you're supposed to use the RSI, right? But here's the thing. If we're just going off the RSI, then yeah, it showed me, right? I guess last week or as last week started to drop, which that was a really bearish week, um, pretty much like no wick on this candle, right? So we pretty much came straight down. Then yeah, it's telling me something really powerful. It's helpful. It was quote unquote right. The tough part is as it's doing that, you're thinking, man, but we just went up for 7, 8 straight weeks. Right. And that's why trading's hard because you really have to like be able to go against reality. Right. What you're seeing in the moment when you're actually getting ready to buy the puts is you're in the bearish. I mean, you're in a bullish move. Right. And you can wait until things kind of really, so don't get me wrong, but the best prices are usually when psychologically it's the hardest to place the trade. Those are the best prices. They really are. Right. And if I had time, I don't know who asked that question, but I would do a really, really, really good job. I think I found out the secret to reversals. I really do. I really do. I ain't gonna lie. I really do. Because it took me like 11, 12 years to see it. But I see things so clearly now. Oh man. Because I've just, I think all this stuff is really just math. If we could like get away from the money and the emotional thing, and money's so important, and I get it. But that's also, I think, what makes it harder. If we could just step away from that, and this was just something fun to learn, just to learn it. You'd approach with an understanding of this is just math. Every indicator is just doing something mathematically, right? What is the stochastic RSI actually doing? You need to know that if you use it. How is it calculating this 80 and 20? Why is it 80 and 20? What if I change it to 90 and 10? Right? What if those moving averages I tweaked a little bit? And I'm not saying you should. I'm not saying you should do that. But once again, understanding, right? Understanding those. So great question, man. Great question. Christopher Johns. Oh, my bad. Let me see. Somebody said, "Is this recorded?" Yeah, it's So if you go to YouTube, it's on my YouTube channel. All of these are recorded on YouTube. Um, they're all recorded on YouTube. Well, kept on YouTube. Um, Just Being Noble. I can't think of my own name. Is the channel Just Being Noble? Let me go back here. Let's see. Christopher John said, "I'm going to attend the options, and when you do another futures, I'll attend that one later." Yeah, we talk. Yeah, we talk. Yeah, I think options is going to give you the most bang for your buck. Futures, by definition, you want to become a day trader, and that's a very special route for some really bold, audacious, borderline crazy people. Because 95 to 97% of day traders don't make any money. It's glorious to talk about, and you know what I'm saying, but like most people who are day traders don't make no money. They don't. Christopher Jones also said, "I've been learning the past few months. I like patience, discipline is big time. Yep. I make a plan and have a hard time sticking to it. Yeah, and that's good to know, right? That's good to know. You have to know yourself. And I said it at the beginning of this. Trading will show you who you really are. You can come up with the perfect plan for today and then mess it up. And the market will give you it'll do exactly what you wanted, but you mess it up. And then it's like, yo, it's me. All right. The charting piece technically after a couple hundred hours, the charting piece is easy. You got that for the rest of your life. It's the psychology of dealing with money and value because it's so important. That's what makes this hard. Um, Adrian said, "Will this be recorded?" Yes, it's being recorded now. It'll be up on actually on all of these platforms. I don't take it down, so wherever you watching it. Oh, matter of fact, I think you're on LinkedIn. I just got disconnected to LinkedIn, so I guess these will be on my page or profile or something. I don't know. I ain't been on LinkedIn in forever. I'm getting really back acclimated with LinkedIn because I realize a lot of people that I need to and want to help are on LinkedIn. The more professional people who really don't see this as like, oh, let me hop into day trading and yada yada, and then quit my 6-figure job. And no, we're not gonna do that. No, we're gonna learn. We're gonna think about this the same way we thought about college or whatever your interest was that led you to that master's or that bachelor's. It's the same approach. It's basic. It's you want to have educated, thoughtful, very practical steps as you matriculate into this, right? And the patience is key. But once you get it, you got it. Oh, once you get it, you got it. Once you get it, you got it. Somebody said, "Tell it." I don't even know what they were saying, "Tell it" for, but I'm trying to. Okay, so let me come back to the charts. Let me come back to the charts. The charts. The charts. Okay, so that's the Dow. That's the Dow. Oh, so let me do this real quick. Let me go. Let me see what I want to use. Let's go to. No, I'm gonna go to QQQ. Go to Nasdaq. The ETF. What do I want to do? Oh, let me do this. Let me do this. This will be fun. Okay, yeah, I'll go here. Month chart. And let me see. How do I want to do this? Oh, I'll do it this way. Real simple. Something real simple. Real simple. I don't know me. I try to. I can go in when we start talking about the technical stuff, but let me find a moving average. Why is this? Why am I acting like I can't find a moving average? Oh, okay, here we go. I'll make this a classic 20. Use a classic good old 20 period moving average. Let me make sure you guys can see my screen. Let me take this tell it off. Andre said, "What's the secret to the reversal?" Andre, oh, you know what? You were in that first options class. This is why I didn't charge a lot. Like I'm telling y'all, I ain't gonna even go on some rant. I'm not. But some of the prices for these courses out here, man, it's just crazy. And they're not even teaching y'all nothing. And I know because all of my students have taken other people's classes, usually these really, really super popular traders who got way bigger brand presence than me. And I'm like, they ain't teach you this, but you don't know that, but you paid this, but you don't know. All right, so I know that's a little messy, but I'm being honest about the industry, right? It's about the teaching, quality teaching. This the class that I'm doing upcoming, Andre, I guarantee you, if you take it, I guarantee you will walk away with such a clear understanding of knowing when price is reversing on any asset on any time frame. The math is the same. It doesn't matter whether it's the 1 minute or the month. The math is the same. And it once again, 2 years ago, that class that you were in, that first basic, little options class, like, I didn't know it then. I've been working. And I've been getting better. You know what I'm saying? Like this has been these last 2 years for me have been amazing. Um, you know, because people have needed me to help them, but also because my students have forced me to get better. And I've gotten better. I'm better than I was last year and the year before. You know what I'm saying? Like that's the journey. You're supposed to keep getting better. And I'm not saying like totally in some major crazy way, but if I can just get 3% incrementally better, that compounds. That compounds. That was how Jordan thought about the game. That was how Kobe thought about the game, right? So we should all have that approach. So check this out. So let's do this real quick. I'm gonna go back to the recession. Back to the recession, which was here. And then let's mark off some things real quick. Let's mark off this as number one. Why am I marking this off as number one? Because wait. Because we went under, price closed under right here. Matter of fact, let's go here like we didn't know what was coming. All right, right here, price closed under this yellow line. Why is this yellow line so important? It's one of the most basic things you should learn very early. If you ever take classes with me or you're taking one now for free, it's for my MBA folks on LinkedIn, right, who have taken B school classes and anything dealing with statistics. If we look at a bell curve, any pool of data, anything, it does not matter what it is. The mean, the average, essentially on a chart is a 20 period moving average. Right. And it's where prices will get higher and higher and higher, and we'll always come back to the average. Something called regression to the mean. It's like a statistical concept. It happens in everything. It even happens with people. What do I mean? You get married, you have your baby, you get a raise, you start your business, life is just amazing. You're super high, just like prices. But guess what? You don't stay high forever. Eh? Then the kids are driving you nuts. Oh, and now you got the stress of the business. You're trying to grow it. It's tough. Oh, your husband acting crazy or your wife. You back down to your average, right? So your emotions go high and then we come back. And then if things get worse, they go under the average. We get depressed. We go through stuff. You're grieving. Something happened, blah, blah, blah. We get back up to, okay, I'm good. Right. And life is like a chart. You're not going to be high. You're not going to be up all the time. Right. So think of this little yellow line as that. Right. It's just it's the average of price of everything. I could put it into a metaphor. We can talk about it being anything. Statistically, in terms of the data, it's just the average. So when price goes under the average, it's almost like with basketball. Like once you go past half court on the other team side, guess what? They're getting closer to winning. They're starting to dominate when you cross the half court line. All right. It's the same thing. I could explain this stuff in like 20 different examples right now. One of them will work for you. Right. So then what happened? This month closed under it. All right. So I'm gonna put another box. And then we're going to compare this to where we are today, and then I'll kind of wrap up there. I think I got 1 or 2 stocks to hit real quick for y'all. Right, so this is point 1. Right, we had 1 candle to close under on the other side. So this is the team getting on the other side of the half court. Oh no, they're on their side of the court. Bears are on their side of the court. Bulls should be afraid. And then number 2 right here. But number 2, what is number 2? Number 2 is basically saying, hey, yeah, they've held the ball successfully on the other side of the court for a minute. And y'all already know how this goes. The longer that team doesn't give the ball up and we steal it and bring it back on our side of the court, the higher chance they're going to hit a shot. And the deeper deeper to their court that they go, yeah, they might hit a 3. They might have players that can hit a 3. The further it goes, the easier it is for that team to win. The further it goes. Harsher the market goes, the more volatility. The harder it goes down, the easier it is for really smart bears to make money. All right, because they're aware you're on our side of the court now. All right, okay, so check this out. Number 3, we pop back above. We're back above. So the bulls were on this side. Okay, we're back on the bull side. Whew. And let me kind of stretch this out a little bit. 4, here we cross back under again. So this is like the Bears stole the ball. They were trying to make a shot. Turnover. Right? Bulls got the ball back in this Bulls versus Bears basketball metaphor. Then the Bears stole the ball back again. They're back on their side of the court. Right? After this candle here, when we closed under that first candle, number 5 was the one. Number 5 was the one that said, it's over. All the fighting was in here. And all of this is the same thing I showed y'all earlier. It's just a big range. This right here, once we made that low, once we made this first candle, we never got above it. And once we got below it, that was it. Recession in full speed. Short everything. These 3 months right here, this was your chance to make ridiculous easy money. Right? So where we are today, or where are we today? Well, this is candle number 1. Because we closed under this line. Closed under the 20. Bears got the ball. Oh, they stayed under it. That's number 2. Here's the tricky part. We were above it. Number 3 was here. We were. Right, we were on this side of the court. The Bulls had managed to get it back on their side of the court for a second, and quickly we came right back down. So, and technically this candle is 3 and 4 at the same time because it was on this side and then we came back. So, if we go here, which y'all already know, and not candle 1, but I'm gonna use candle 2. If we get under here, all right, that's where candle 5 is waiting to happen. All right, we got to break these lows. We break those lows, we're going lower. And it's the exact same thing happened last time. Like in a 5-step sequence. Just by knowing one indicator, just this little 20-period moving average, just one. Just one indicator, just one. I'm about to start talking crazy, man. I am. Y'all out here paying $10,000, 20,000, paying all these crazy amounts. These people ain't even teaching. My free content is better than some of these entire classes. I just showed you literally exactly what happens virtually in every downtrend. And if I had to pull that moving average off, I could explain it a whole different way with different indicators. Whole different way. Somebody said, "Oh, I'm definitely taking it. I'm definitely taking it, bro. You and Joe make it stupid simple." Yeah, man. Yeah. You know what? Me and Joel are both Aquarians. We're both Aquarians. Aquarians love thinking and love, like, we really do. We're the philosophers of the world. Deep conversations. We just want to think and talk and wrestle with, right, ideas. We love ideas. Ain't nothing better than me than a great conversation. Somebody says, "Sir, I don't even know what the cert was for. Was I getting too reckless? I'm just having fun, man. To be fair, there are so many educators out here. Don't ever think you know who I'm kind of talking to if I say something like that. Really, because I've experienced and seen so much. I know way more educators than you guys know, because this is my space, right? I legit could probably name 25 right off the top of my head, right? So kind of keep that. Remember that I've seen crazy prices 10 years ago. I'm gonna give y'all this story real quick. I'll give y'all this story. There was a guy in a book. I don't even say the name of the book because I don't want y'all to read it. There's a book. It's called Millionaire Something, blah, blah, blah. I read it like 10 years ago. I was trading the Russell 2000, which used to be something different. It's called a RTY now. It was something different back then, and it had more volume. It was like maybe $10,000 a contract. The tick value was $10 per tick. I like futures with that $10 per tick because it's real easy for me to do the math. $100, 1 point, 10 ticks, $100. If it moves 5 points, that's 500. If I do 2 contracts, 500 times 2, that's 1,000. Right? I can calculate the math real fast. The futures that are like it's 750 a tick, 12. I'm like, what is just right? So, but I'm reading in this book about all these, these super great traders, and I'm reading through this guy's principles, and I'm like, wow, this is exactly what I believe. Wow, this is what I think. Wow, this is the same way I kind of, so it's just like, wow, like perfect correlation. I felt like it was a sign, like I'm on the right path. And I was making money back then, but I was also that European debt crisis. Ooh, that volatility was beating me up. Bollinger Bands don't work, but they do work, but they trash, but they're great if you know how to use them, right? And so, man, this was years later. For some reason, somebody was talking to me about just the industry and scams, and I've gotten, because of insider trading, because of who I am. A lot of people tell me, like, y'all tell all the business, y'all do. Every I get the raw. People tell me how much they lost, how much the classes were. They didn't right. Y'all tell me everything about everybody. I don't even be wanting to know. But it helps make me a better educator, right? But this guy, for some reason, I don't know. I thought back. I hadn't read the book in years, and I went back and I literally I found it on my shelf, my bookcase. I found the book and I Googled the guy. Y'all, this blew me away. This dude who I love, never met, was getting all these principles from. I'm like, man, this dude is like, oh wow, like he really gets it. Right? He's a trader, and his futures is specific. And the principles aligned so well with what I was doing and what was working. I was like, man, this dude has to be legit. Do y'all know? I Googled this dude like 5-6 years later, and he had just gotten like 30 years in prison for running like this long, like 10-year scam using like futures trading. But he could talk the talk. He could talk the talk, and he was scamming people. And he wasn't African American, right? And so that for me, it's tough, man. Somebody who you don't know, but you almost look up to is like, wow, this guy's an informal mentor. When I couldn't really find mentors because his space is like, who trades futures? And who the heck trades futures? All right, so I found this guy in a book for years. Just man, and something made me think, and I was like, dang, I don't know even what led me to kind of Google him, but I was just kind of curious. I just wanted to, I don't know, see where he was. I think I was actually thinking about like emailing the guy, like to connect. You know what I'm saying? Say he had just got 30 years in Texas for running some Ponzi scheme, but he could talk the talk. So it's unfortunate. It really is. This space. It really is. It's so much more grimy, rap, drug, culture, low ethics than y'all know. This is crazy. I got some stories. Anyway, Charles said price action plus volume has been my cheat code for reversals. Price action plus volume. Yeah. I mean, at the core, that's all it is. Right. It's price reversing, hitting a high, going back to some key level for some reason, and we're not getting enough buyers So we get volume coming out as bulls exit and smart bears start to get in. Both speed up the volume. That's at the core. That's that's what it is. Yeah, that is what it is. Somebody said that's me. It's the info you are providing. That 20 MA. Yeah. Glad you could take something from this. For sure. That 20 MA I love. And it's like one of my basic kind of things I teach everybody. Like you're not gonna get a class from me and not get the 20. We're gonna start at the 20. Cause it's just to me, it's like once again, it's the half court line on a basketball court. Little boys out, little girls out here playing basketball. They don't know what the half court line is. And get your little butt off the court. You don't know what you're doing. You know what I'm saying? Like you don't even understand the framework. That's out of bounds, and that's the 3-point line. And here's the free throw. You're supposed to shoot at that basket. Here's the half court. Once they pass half court, you got to get on them. Defense can, right? Have relaxed defense. It should start at half court. That's when you DN them up. Unless we're doing a full court press, which is just a lot of energy to expend for a whole game, right? So it's the same thing. I'm like, it's the same basic stuff. And then that's cool. That's easy. But then if I gave you a 10-question quiz right now, and the questions they slowly got harder, that's where you really know what you know. It's easy to watch me talk about all this. I know it because I've lived it for 20,000 hours in a whole decade plus in my life. This ain't even work. Right. But the work it's the repetition. 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 When does this 20 not work? Why is it 20? Why isn't it 25? Well, what the hell is a 10 if that's a 20? Well, what's a 40? Why don't we use a 40? Or then what would the 40 be? If that's half court, then right, it's just tons of questions and exploration. Right. That's what makes a really good trader, right? People who ask a lot of questions and who love the process of learning. Because there's more than enough to learn to last you a lifetime, especially with options. Let me check something real quick. Let me try to find where is that at? Let me try to find this post. Where's that? I just put it up the other day. Okay. NVIDIA and Roblox. So let me go. Oh, can y'all see my screen? Hold on, I can't even see my screen. Oh, yeah, I can't see my screen. Ooh, that was gonna be a debacle. I hate when I pull it up and y'all can't see what I'm doing. That's the worst. Okay, so I'm gonna go here and then we're gonna I'm gonna give you guys a little chance to ask me some quick questions and then I'm gonna wrap it up for the day. But let me cover these two stocks. Don't miss this, and I'm gonna give you a little bit of information before I go about the upcoming class and just the workshops. I ain't trying to sell you on no class. It's for who it's for. I don't even care. I try to advertise and market as clear as possible. I know how to trade, so I love teaching and helping, but if I'm not for you, I'm not for you. No stress, no pressure at all, no sales pitch. Oh, let me get rid of that. Okay, so let's go to NVIDIA. Let me get rid of this stuff real quick. Somebody asked me to take a look at NVIDIA. So on the month chart, I'm gonna start there. We are under the 20. We got a couple candles still under it. It looks like we just did what we did on NASDAQ. We pushed up to test the 20, and we're already at new lows. So we're already at step 5 on the NVIDIA. Right. And think about how fast I assessed that. Because I saw one candle under, 2, 3 under, 4th one, we tested it. 5th one, we are actually under this little range. Real quick. That literally took me, I don't even know, 5 seconds to see. All right. So because I analyzed the Dow and NASDAQ and S&P, if y'all notice, I started today, I've been bouncing off the 3 main indexes. Why? If you can analyze the 3 indexes or just one, just pick one. You already kind of know what everything else is doing, depending on how it's correlated to the market. Now, NVIDIA has a higher beta, which is kind of like the speed of correlation. So think about it like this. If the S&P moves 100 miles an hour, NVIDIA goes 200 miles an hour. All right, so if stuff is down, NVIDIA is going to be able to go down a lot faster or up a lot faster than the S&P, which is the average. It just moves at a 1.1.0. It goes 100 miles an hour on average. NVIDIA has a higher beta. Beta's the fundamental coefficient. If you don't know what a beta is, Google it. But that's all it really is, right? It helps you to understand the pricing fluctuations compared to the S&P, specifically the S&P. All right. Let's see. Somebody said, man, y'all tap in if you haven't already. Noble revolutionized my trading and how to break down the markets. Man, I'm gonna leave this up. I'm gonna just leave that one up. I'm gonna leave that one up all day. I'm gonna leave that one up. I am. I'm gonna leave that one up. Nah, that's good stuff, man. I appreciate you, bro. I always appreciate folks that let me know how I've helped them, because I really don't get a chance to talk to all my students like that. I mean, it's been thousands of people over the years, so yeah. People don't even always check in with me and be like, man, I appreciate what you did, and that's cool, don't get me wrong, I'm not griping about it at all. Okay, so that's the month chart. Let me go to the week. Look at the week. Look at that. Even on the week, y'all. Look at this. Even on the week, what did we just do? We just went up to the 20. We couldn't get any higher. We came right back down. Right back down. Right back down. Right back down. So yeah, it's gonna be interesting for NVIDIA. And here's what y'all gotta realize too. Some companies are kind of already. Think about this for a second. As a matter of fact, I'm gonna put that comment back up. Wait, no, wait. I'm gonna put this comment back up. I wanna, just for a second. I gotta leave that up for a second. I'll leave it up for a second. I'm gonna make this right here the screenshot, the thumbnail for this video. All right, me pointing down, smiling. Anyway, what was I gonna say? Some stocks have already started their recession. All right. Some stocks are already in a bad recession. NVIDIA is already done the 1, 2, 3, 4, 5, now breaking lower lows, going to the next support. Bulls losing, Bears getting excited, right? It's already there, right? So I always start, y'all know me, I always start with the the S&P and NASDAQ, because as a baseline, when those go back bullish or break a low, everything else is just going to either follow or it's already there. The faster, higher beta stocks usually go there faster. The like 1 to 1.5s, like the Apples of the world. I mean, Apple's like one of the best companies in the world, so you can't really. Apple's always doing its own thing. Apple would be like the only thing holding the whole market up. It'll be the only stock giving people confidence. And I'm like, why would you have confidence? Because one stock is holding everything up. That don't even make sense. That don't even make sense. All right. So Dealey said, when I blow, I'll be sure to let the world know I learned from you. I appreciate it, man. I appreciate it. Appreciate it. And even if you don't, that's cool. but I deeply, what I'm saying. I appreciate it. I do. I don't do this for that. You know what I'm saying? Like, it was never about acclaim and credit. But I've helped some people. I've helped some people who just who've gone on to do well. So it is dope when I do get that. Thank you. So all this gratitude is huge, man. It's huge. There's a value to gratitude. Deep value. So I appreciate y'all. Somebody laughed. Somebody said Apple and Tesla. Apple and Tesla, the only thing held my portfolio up. Yeah, I know. And I can't lie. You know what's funny? You know what's funny about that? We start talking to me about options trading. I've been saying it for like the last year, less is more. I told you I got in that Dow trade because Apple wasn't where I wanted to buy it or sell it at, rather. So I say that to say, even with options, like I only trade a few: Apple, Tesla, NVIDIA or AMD, S&P or NASDAQ. It's like 4 or 5. Why? Because they have the most volume and volatility, and the charts are easiest to read. I ain't trying to make this hard. People be asking me about stocks that I look at the chart and I'm like, what the hell is this? I would never trade this, because instantly I go to the week and I can't make a very clear boop, boop, boop decision. Like very just super easy, just clear. You know what I mean? Like, that's part of it. Don't make it harder by trading stuff to get the glory of trading some hard, ugly chart. I was eating before. Okay, so let me do this real quick. Oh, I can't. I can't do that yet. I can't do that yet. Let me go here real quick. Let me find something. I think I can show y'all this real quick before we go. This will be enlightening. This will be fun. Let's end on a little fun note. Let me go back. What is that? Oh, here we go. There we go. Pop that out. Let me find this and let me share. Oh, stop sharing that screen. Let me share this screen. Okay, so I'm gonna pull this up real quick. So this is what I asked in my the 4 workshops that I did recently. For those of you who got the chance to join, and you'll be able to go through it. It's free. It's super dope. You're gonna love it. I added some stuff every time I listen to the feedback, my little surveys and all that stuff. I wanted to make it as best as it can be. It's legitimately worth money. I should have charged like $149, $199 for it, something. But it ain't about that. I wanted to pull in as many people to just get access to like really realizing that options it's a lot more that you can do with options than y'all know. You can bring your prices down if you really understand options. You can afford there's no stock you can't afford. You can afford it, you just don't know how to make it affordable. You can always give them more time. You can always buy more contracts, even with the exact same amount of money. You could give you 500, me 500. I guarantee you, I know how to buy more contracts and give them more time than you do, because I have a deeper level of understanding of how to do it, and I can show you that step by step, right? So we start getting into quote unquote the more advanced strategies. They're advanced, but they really not, y'all. They really not. Oh, they really not. So this was a question for me that did it. This was what I asked my students. This one was just one of those 4 workshops. So not a ton of people. You see the little 21. So only 21 people answer. But trust me, across the 300, the data was the same. Calls and puts was like 3.5. That's the basics, right? So to me, that should have been 5. If you're trading options, you should have a level 5 understanding of calls and puts. That's the basics. The selling side, selling contracts. If you don't understand selling and what selling means and how it works and the math, everything else is going to be confusing. You're not going to be able to really process the more advanced things because you don't have those 2 basics down. Calls and puts, buying, and then selling, and how that works, right? If I sell you a 180 Apple call because you think Apple's going up to 180, I sell it to you. I hope Apple doesn't go up because I'm trying to take your money. So you're buying the call, I'm selling it, but we have different objectives. I hope you lose so I can win and I keep the credit. All right. So you got to understand that. Then once I get you there, then it gets fun. Vertical straddle strangles, butterflies, calendar spreads, iron condors. Then we can talk about all of that. And that's when you realize you don't even have to know the direction. You could be like, I don't know. No, I am totally confused. I don't know which way we're about to go. Okay, cool. Let's go both directions. Let's go both directions and make some money. Options is crazy, man. I'm telling you, man. I'm sorry. I'm having fun, man. If y'all don't sign up for this next class, you don't even really want it. You don't really want it. Anyway, let's see. Somebody said I've been selling covered calls. For those of you who are like, what are covered calls? I want you to Google it. Anytime you hear something you don't know, go straight to Google. Investopedia, really great site. They have a lot of very standard. Even now, like as an educator, when I kind of need to go back and give not my definition, but like the technical definition, I still will go back to Investopedia and just kind of copy and make sure it's that. And then I'm gonna give you my own spiel on it and yada yada yada. But so some of you guys don't know what covered calls are. So Google it. That'd be a good little mini homework assignment after this. Don't let this end it. This is gonna end in a second. go do something for just 5 minutes to take this a little further, right? Someone says, somebody else said, always someone on the other side of the trade, always. And that's the thing, for newbies. I'm like, you got to realize, man, you're competing with the smartest financial minds in the world. You think when it comes to you losing or me winning, what do you think is more important to me? Me feeding myself and my family, or you feeding yours? I'm gonna pick me all day. All day. I'm gonna take your money. And that's what this is. That's what this is. Bulls versus bears. It's an exchange. Someone wins, someone loses. When someone buys, someone sells. That's what it is. So for those who took the options course, the options workshop, you guys are gonna get first dibs at the class. I'm almost got everything. I got to record like one more little video today. Man, putting these classes together is work. It's work. I've been working this stuff all week, all the little back end stuff. And it's work, but I love it. It's good work. So if you were a part of the workshops, you'll get first dibs on kind of entering the class because I'm only going to take a certain number of people. For those who have not even seen it, who may be signed up, don't worry. I got it. I'm kind of repackaging it a bit so you can. I'm actually even making it a bit more concise. We're gonna jump in. I'm gonna give you the meat, right? It's gonna be real concise. I want to make a really great use of your 90 minutes of time, and I also want you to take the quiz at the end to see how much you actually learned. And that's it, man. We're gonna have some fun. As always, I think I got one more comment. Christopher John said, "I need that class." Yeah, man. I needed it. I learned all of this the organic long way. So I love being able to just shorten you guys' timeline and give you some strategy around how to use these things that I know work because I actually use it. Right. So thanks for joining. As always, subscribe to the channel or share this post with somebody on LinkedIn who needs to see it, think about it, for my Nishimba, my national black folks. I remember what it was like getting out making six figures, and then when the market hits, you're like, oh, but I don't know how to trade, or I don't know about that, right? Schools aren't teaching us that stuff, right? So I want to make sure I'm speaking to everybody. Having an MBA, a PhD, none of that stuff means you know how to trade or make money. It just means you're really get good at that specific industry, that expertise, that body of knowledge, right? So I want to help as many people as I can. I always do. Charles says, "Stop playing and come print this money with me." Yeah, and we can be on the same side of the trade, Anyway, thanks for watching. I appreciate you guys. Share this video with somebody that you know and that you love that needs to start thinking a bit more about being a really good steward of their money, long game. And if you're over 20, if you're over 18, you have to learn. You have to. I'm sorry. I'm not saying it because I teach it. I don't care who you learn from. You have to learn how to trade stock options because it's going to take you several years. But once you have this skill set, you have an extra way to make unlimited, limitless income for the rest of your life from the world's greatest companies. And you live in the country with the largest market cap that produces the best companies in the world. So why wouldn't you get your share? I'm out. Thanks for watching. Peace.